Hi, this is Dan Stewart, and this is your NORAM Asset Management Market Update, Tuesday, January 11th, 2011. Well, if China was Batman, Japan is Robin. Japan announced today, or more correctly, last night, that they are coming to the European Union's rescue, that they are actually going to buy these bonds and help bail out the European Union too. You see, Japan sells a lot of stuff, just like China, to the European Union, the biggest market in the world, slightly bigger than our U.S. market. My big question is, where are they going to get the money? I mean, those conservative bastillions of fiscal responsibility? Are you kidding me? Japan is in worse trouble than any country on the planet. Their demographics, their debt load, their interest expense alone exceeds their tax receipts or revenue coming in. So forget all their spending. Just the interest on what they owe is more than they bring in. Japan is done, and they're desperately trying to figure out a way to create growth in Japan. And if European Union goes back into a double-dip recession, Japan is done over, put a fork in it. Portugal looks like they're going into a double-dip recession, and they really need a bailout. And what these countries have realized is that if Portugal goes, Spain is probably next, and Spain is a lot larger. News of the Japanese bailout spurred the European markets, and they were up across the board today and recouped much of their losses from their sell-off yesterday. The Asian markets were mixed, but for the most part in positive territory. Our markets fared pretty strongly. The Dow was up 34, the NASDAQ up 9, and the S&P was up 5. We were up about 1/3% across the board. But gold and silver are resuming their upward bullish trend. Silver, the big winner, was up 2.5%, up 77 cents to $29.56 the ounce. Oil also did very well, up $2.11 the barrel, up 2.33% to $91.36. Copper was also up over 2%. So the commodities, it seems, are realizing that these countries around the world are going to print. Treasury yields, surprisingly enough, 30-year yields were down and therefore prices were up. But the shorter term, the 5 and 10-year, yields were up and prices were down. So investors were starting to go a little bit longer out on the treasury yields. This may signify they think our interest rates are going to come down. I spoke about that a few days ago. If Europe gets in big trouble, you may see a dip in our interest rates, but don't be fooled. The long-term trend is up. The US dollar was weaker against all the major currencies. Now the euro and the pound is understandable because of Japan supporting the euro. It may look like the European currency may get some support. But Japan, I gotta be honest, that just befuddles me. They talk about a huge bailout for Europe, not even their own country, and their yen doesn't get weaker against the dollar. Just wait. This has been Dan Stewart for your NORAM Asset Management Market Update, Tuesday, January 11th, 2011.